Hey everybody, it's Pete. Good morning. Welcome to a new episode of Stocks for Breakfast. Thank you so much for joining me here today. Got a lot to talk about. Markets making new, fresh, all-time highs again. Russell 2000 catching a bid yesterday, which is a big deal too. And we actually have a question today. Is that a good thing that the Russell 2000 caught a bid yesterday? It's been in a trading range for basically 12 months and just kind of peaked its way above that. And we're going to talk about why that might not be a good thing that the Russell 2000 hit new highs and is approaching fresh 52-week highs. We're also going to get into Bitcoin and Bitcoin mining stocks. We actually talked about Mara this morning. That's going to be the first one. Mara hit a really big resistance level yesterday. Sellers have been shoving it down at this level for the last year. Finally punched through there pretty hard yesterday. So today we're looking to see if Mara and some other Bitcoin mining stocks continue to hold a bid. We have a lot to talk about. We're going to do a little bit of a deeper dive into tech stocks and healthcare stocks. And we're also going to talk about a stock that just reported earnings that is up almost 9% right now. We have a lot of good trade setups and stock picks that we're going to discuss today. So stick around. I'll be back in just 1 second. Okay, welcome back. So as with everything we do, everything here is for educational purposes. It's up to you to make that final decision. It's up to me to help make you have better decisions. All right. So first, I want to say hello to a few people. Don't want to carry that on too. I keep getting called out for saying hello to people, but I want to do it anyway. Kevin O'Toole, good morning. Thank you so much for your participation in the Facebook group. Really appreciate that. Let's see. Brian O'Shea from Durban. Good morning, pal. Where's my morning partner? Where's John Bates? There you go. Good morning, John. Let's see. Ian Murphy. Good morning. Good morning. All right. All right. Joseph, how's it going, buddy? All right, so we're going to start out with Bitcoin mining. We're going to actually jump right into that, but I just want to give you a little bit of a tease for what we're going to talk about in a couple of minutes. We're actually going to take you behind the scenes into some of the topics that we had on our weekly coaching call last night. If you happen to not be a part of the boot camp, the weekly coaching calls, I get really probably my most excited time of the week. They generally run around 90 minutes, and these are there's a difference between we're in Discord trading every day together versus we're learning how to trade together. You want to learn how to trade and ask those really good questions after hours so you're not distracted by quotes. And then when we go into the day, during the day, we're executing what we learned, discovered, and kept beating into the ground, how to actually improve your trading. We have probably around a dozen topics from last night, and I want to walk you through those in just a couple of minutes, but I want to first get into some of the stock picks that we're looking at today. We're obviously going to talk about Mara. We're going to start out with that, and then we're going to work our way over into some other ideas. Obviously, we every day we start here. This is where we're trying to be in sync with the smart money as much as possible, as opposed to trying to chase it, quite honestly. When you're good at sector rotation, when you understand the stock market power pyramid that we talk about every day, and that we work every day, not just talk about it, work on it every day, this is where the easier trades are. Now, I just can't stress this enough. One of the biggest challenges that we have when new members come into our community is that they are mostly unprepared, for lack of a better way of putting it. They're running scanners. Maybe they read a headline and they're trying to jump right into those stocks without really understanding how long has order flow been obvious and whether or not right now is a good time to buy it. So if I could ask you to write something down this morning in the context of what we're looking at here on, let me make that a little bit bigger for you, on the context of sector rotation, is first pick a spot, pick a side, then pick a spot. So remember, everything that meets the criteria doesn't necessarily mean that it's a trade idea right now from a risk reward perspective. So if you could take a snapshot of that right now, that's the sector rotation that we're looking at today. We're going to focus on those top three. Some healthcare stocks actually came into rotation this week, and that's where we're going to start to take a look at some ideas today. First, we're actually going to go on to the charts. We're going to take a look at Under Armour. We spend a lot of time, and obviously right now is earnings season. So we spend a lot of time on what to pay attention to when the earnings announcement is made. And we're looking for percentage growth over the last quarter, percentage growth over the last year. It's not the raw number of sales. It's not the raw number of earnings per share. It's the percentage growth and the percentage growth of what was expected. So you can still have a percentage growth that was pretty good, but if it was expected to be stronger, then that's actually considered a negative, even though it was still good, right? Or what was expected. So Under Armour actually came out. They beat on sales, they beat on earnings per share, and they raised guidance going forward. So remember, when earnings comes out, we're not trading what happened. We're trading the guidance, the numbers, the expectation going forward. And Under Armour actually beat on all of those, including what was expected and guidance. So you can see it's actually up 8.72% right now. Let me actually make that a little bit bigger for you so you can see it. So Under Armour will definitely be in our game plan today. Now, from a longer term perspective, there's not really much obvious order flow here. So how does that translate into a trade, and how does that translate into position sizing? Because we're trading the catalyst that's going on right now, that means that our position sizing needs to be built into the trade instead of going in with what you might call your maximum risk per trade, your maximum allocation per trade. Because this is the first time order flow in this particular idea, we've been kind of drifting higher over the last week or so, but this catalyst is new. This catalyst is something fresh, and maybe we'll finally push the stock beyond the $21 level that it hasn't been able to get through. So not only do you have lack of order flow over the last 6 to 8 months, it's a first-time catalyst and a big resistance up here in the $20.50 to $21 area. So the way I'd be attacking this idea right now is it would be my initial position with the goal of adding to the trade if this catalyst has follow through, which I expect it will. So that's how I'll be managing this individual position. So the next thing we want to take a look at, which is what we talked about first today, which is Bitcoin and Bitcoin mining stocks. So we actually want to get over here and keep an eye on what's going on in Bitcoin. So obviously Bitcoin had a ripping move from the end of September into into the middle of September. And we said, all right, awesome. If you didn't happen to be long already, if you didn't happen to own it already, you need to wait for a little bit of a pause for a better spot to manage the downside and to see reward potential be a little bit better. So now it actually paused for roughly 2 weeks. And now if we go out to what we usually use is the hourly chart when it's not as obvious, you can actually see that we finally broke and now we're pushing higher. So how does that translate into some ideas? Well, Mara is the Bitcoin stock that I personally trade a lot. Again, I'll give Aldo in our community, he's our Bitcoin trading pro. You can see that 56 has been the level that's been having a hard time. Once, twice, 3 times over this during 2021. And right now you can see it actually punched through there. Let's actually go to the shorter time frame, even though most people might not be day trading. Punched through there and went through pretty hard on some pretty good volume. So we're looking for it to follow through today. So because Bitcoin is following through, Bitcoin futures, we are now seeing Mara up another 4% this morning. So Mara will absolutely be on my radar. So how do we know when to start to have a little bit more share size? How do we know when to hold a little bit longer, which is one of the bigger questions. And I'm actually going to walk you through that here when we get into the ideas from last night's coaching call. So what we're looking to do right now is we need a little bit more proof. We need a little bit more feedback, and we need to see it get through 56 and hold the bid. So if you happen to not be long Mara already, we obviously know that this 56 level is a big resistance level. So today, again, very smartly, especially ahead of FOMC tomorrow, which we're going to talk about in a second, which was also a question from last night's coaching call, is that I am looking to initiate my first piece at this level. I don't want to have full share size until I see the buyers finally overtake this level, and then we're looking for a little bit longer term move. So then the next question comes in, if it does break through here, what is the profit potential on a new trade in Mara through 56? And when I say profit potential, and this is actually misunderstood quite a bit. Like a lot of people say, don't put targets on stocks because you have no idea how far they're going to go. There's 2 different targets that you need to have in mind when you're putting on a new trade. And this doesn't matter if it's a day trade or a swing trade, quite honestly. You need to have an initial profit target that justifies the risk. Because let's face it, look, if you have no idea how much you could potentially earn on a trade based on what the stock normally does, then how do you adapt to position sizing, and how do you quantify what the potential reward is in order to justify taking that risk? And I'll give you the best example of that. And I'm going to give you a little bit of a sneak peek into what we talked about last night. One of the questions from our coaching call last night, which was here. This question was asked by David last night, and we're going to get a little bit into it. And maybe you can't see it. Let me just make that a little bit bigger for you, which is getting beyond break even. And it's a big problem because there's many traders who are who can speak trading. You can speak Fibonacci, you can speak Elliott wave, you can speak all that MACD analysis, moving average, convergence, divergence, all of those terms, but you actually can't make money. And you've stopped losing money, which means that you have, you understand what not to do. You're doing less of it. Now, the next thing you need to do is understand how to get paid. And that's a big part of trading. A big part of trading is that's why we opened a trading account. Look, nobody opened a trading account to be the world's greatest chart reader. Nobody. You opened a trading account because you want to get paid. So the first thing is to understand, make a big list of what doesn't work. But David's question is, I've learned what not to do anymore. I'm not doing that anymore, but now I'm still at break even. And break even comes down to two things. And the answer we gave him in last night's call was, first is your timing is probably off. It means that you need to learn how to read the tape. Remember, the three pillars that we teach in the boot camp is stacking the order flow, reading the tape, and reversing risk. So if you understand how to stack the order flow, which is a monster part of trading and kind of what we're talking about in just a little bit of pieces here, you understand which stocks have smart money making commitments in real dollars. And then how long have they been doing that? So those are pieces of stacking the order flow. But just wanting to be a buyer of a stock is not enough to take that risk right now. You have to justify, if I buy right now, what are the odds of this trade making a reasonable amount more than what I need to risk? So getting into the point where David's asking, how do I get beyond break even? It generally means your timing is off and you're taking break even trades. So taking break even trades makes you a break even trader, which is where David is right now. And that's where we're going to work with him in a lot more detail inside the boot camp on a daily basis. By the way, if you find these videos valuable, please do me a favor, smash that like button and hit the subscribe button. It would mean everything to me. But also let me know that I'm providing value to you. So does everybody understand that? Do me a favor, just type yes in there, because there's a difference between wanting to buy a stock and buying a stock at the right time. And then we're going to take that a step further. Okay, I know I'm turning this into a trading lesson, but it's critically important. There's two ways to make money when you're trading stocks. Obviously, the first one we just talked about, which is timing, right? Getting your timing right and making sure that your risk reward makes sense. So getting back to the point that I'm making before, you need to know what the reward potential is in order to justify taking that risk. Because if you're taking a trade where you could probably make 5 and you're risking 5, that makes you a break-even trader. But if you're timing your trades right, where you risk 5 and you can make 15, now you're cooking with gas. Now you're actually setting yourself up for profitability. The second part of that, if the first part is timing, the second part is time in. So timing and time in. Time in means how long you hold the trade. How long are you in that position? And that's the next part of profit targets, because the first profit target is understanding what can I reasonably make if I accept this risk. The second part of that is, if it reaches my target, how much more can I make on that trade, which is the amount of time you spend in that position. So we call that the profit maximizer in the boot camp. And the profit maximizer is a way of allowing your stock to fluctuate a little bit in exchange for a much bigger move. So we're risking smaller pieces of unrealized profits in exchange for a much bigger move. And that's where the profit maximizer comes in. So if you could imagine, you have your initial stop, you have your entry, your stop loss, then it moves in your favor and you have your initial profit target. But then what happens when it gets up to that initial profit target? You sit back and you're like, all right, let's see what's left here. And then we shift over into profit maximizer mode and we allow it to fluctuate a little bit in exchange for a much bigger win. And what's kind of cool about that is, raise your hand if you hate trading losses, right? Who loves trading? Nobody, right? However, all of that emotional baggage of losing trades gets completely wiped out of your trading when you make more on your winners. So think about how much that affects your other trades, where you're like, all right, I have a track record. I know if there's a big trade out there, I'm going to make big money. So if I have to take a loss on this trade, I'm out. Not a big deal. It's just a business expense, and I go to the next one. So the side effect, or the related positive outcome of making more in your winning trades and knowing how much time to spend in a trade, goes all the way back to affecting that you now have absolute conviction. You see a trade, you put it on. You see a trade, you put it on. because it's not about the individual trade. It's about being in position for the profit maximizer to give you more money. I just hit you with a lot of stuff, right? But we're talking about how to go from I'm breaking even to the other side of making more money. Now, you might be saying to yourself, holy crap, that's a lot of stuff. Yeah. You want to make unlimited amount of money? You want to have that unlimited upside where you're sitting on the beach on your laptop? Or maybe you just don't want to work for anybody else. Maybe you just want to make an extra $3,000 a month and pay your mortgage. It doesn't make a difference. The bottom line is you need to be prepared. You need to understand what your risk should be. You need to understand how much you could make on your initial trade, and then you need to understand how to make more on your winning trades. That's not complicated. You just need to understand what to look at. Remember, we're big on talking about the difference between chart reading and trading. Chart reading is not trading. Let's be clear about that. Finding patterns is not making money. That's understanding what you're looking at on a chart, but that's different from share size, stop loss, working order, scaling in, scaling out, initial profit targets, and maximizing your winners. That second part is trading. All of that other part is trading. That's not on the charts, okay? So if you want to learn how to step up and walk through this process with you, I strongly encourage you, click the link below the video and at least learn what's in the bootcamp, and you can decide if it's for you. It's only 30 days. It's not a subscription. And again, I'm not selling you. I'm just pointing you in the direction. If there's a gap between where you are and you're breaking even, there's something missing. So just click the link below and learn about the bootcamp. So bringing this all the way back into Mara and the Bitcoin stocks, as long as Bitcoin has now broken out of this 2-week move to the downside, it paused, held the bid pretty well, right? We talk about Fibonacci levels, and it did not pull back that far. It went down, pulled back to a reasonable level, which means that previous buying pressure, and let's actually show you what that means. It means that the previous buying pressure was still pretty strong. So a decent pullback would have been roughly 50%. So if we get into that and we show you from here to here, that would be all the way down here at 54,000. That would be a 50% retracement, which still means the previous trend is still valid. Let me actually make that a little bit bigger for you. It would still mean that this previous buying was still valid if, let me just really make this super clear for you. Down here is the 50% level, right? So I'm actually going to remove this right now and show you what that means. So the fact that it did not pull all the way back to 50% before it started to head back up again, that means that this buying pressure is still valid. That means that this buying pressure is still strong. It can only mean that, right? Because if that buying pressure still wasn't strong, it would just kind of drift down, drift down, drift down. But buyers finally said, all right, we like this price, and they stepped up again. Smart money stepped in and said, let's start getting involved again. So now, as long as Bitcoin holds this, so now we take it a step further. Now we get into drawing. Remember, we talk every day about getting involved in the charts and drawing your levels. Well, right there is the horizontal, the move to the upside. It went pretty parabolic, right? The next level to draw is where it broke that trend, which is right here. And now the next level on top of that is you need validation. So right now, Bitcoin and Bitcoin futures are in this box right now, which is a pretty wide box. It's still bullish because it has not broke to the downside. It would need to break to the downside here to invalidate this buying. But because it's still valid and in this window right now, we're still looking for longs. We're looking for longer term longs above this level, which is new highs, which was the previous high to the pullback. So all of that gets to the point now where we're talking about Mara and getting back to the initial position sizing at this big resistance level where it's had a hard time getting through. So once, twice, 3 times, let's say 3.5, 4 times, 56 is a big level. Right now it's at 57, 55. And combining that with Bitcoin, you see how we're stacking the order flow? We're stacking the argument. This is where absolute conviction comes into your trading, because you're not just saying, oh my gosh, I watched Kramer last night. Kramer's awesome. We all love Kramer. Or I watched Pete this morning. You need to build that argument of why we should accept risk. So we're kind of doing that right now. Bitcoin rallied. It didn't pull back to the 50%. We drew the box. We know that if it breaks out to the upside, that means we could be sizing up. So Mara, relation to Bitcoin, Mara broke out. Bitcoin held the bid. Now we're looking to trade Mara. But because this is a big resistance level in Mara, it's only going to be a piece of our initial entry because it needs to prove to us it can stay above 56. If it breaks out and pulls back, not that big of a deal because we knew we were smart. We built that argument that it's only the first piece of a trade. Got a lot of questions about what it means to be in the first piece of a trade. It means that if you want 1,000 shares, maybe on this initial entry, you'll have 400 shares. You're not going in with everything. You're not betting the ranch on your initial position because of everything that we just talked about. So I'll give you a couple of other ideas in this sector. Mara is one of the Bitcoin mining stocks that our buddy Aldo, who's our crypto trading pro inside of our community, Mara, Riot, which is having a little bit of relative weakness compared to Mara, which is why we're spending so much time on Mara. Then you also have HUT, H-U-T, and you can see HUT is actually up almost 3% right now. You can see the big difference. Look at, again, visually looking at it. Can you visualize buying going on here versus buying going on here? Where's the money being spent? So if the smart money is already allocating money to Mara and HUT, why would you be in Riot? You're trying to bottom fish when there's already buying pressure in the other one. We're just looking to piggyback. We're not looking to hope something happens. We're already saying, no, it's already happening. Let's get in sync with that and let's hop on board. So remember, pick a side, then pick a spot. That second part of pick a spot is timing, and then you learn how to stay in that for the right amount of time. So we have Mara, Riot, HUT, and the last one, which is a little bit more affordable as well, is BTBT, and you can see it had a pretty big day a couple of days ago. Okay. All right. Let's see. What time are you teaching in the boot camp? Every day. Our community is going on all day, every day. The boot camp actually has online courses. Then we have 3 coaching calls per week. There's a lot that goes on. And then obviously we're in the community all day, which actually brings me to another point. I want to get to some stock picks first, and then I want to go into, I want to discuss this, which is what we talked about. All of this was just last night's coaching call. All of this was just last night's coaching. I want to come back to this in a second. If you want, you could take a snapshot of that. Pretty important. But I want to get into stock picks. That's why everybody came here today. We talked about Bitcoin. We talked about Bitcoin miners. Now we want to actually, obviously, we have the FOMC tomorrow. We'll talk about that in a lot more detail tomorrow morning. But I want to talk about some ideas, and I want to walk through this. Okay. I want to talk about this right now. Consumer cyclical. We're going to focus a little bit more on technology and healthcare here because we want to find some ideas that are actually in play today. Let's see. How many trades would you have on at one time? Well, I'm trading for 21 years, so that's going to be different for everybody. That's kind of like saying, how fast should I drive? I can have anywhere from 3 to 10 trades, 15 trades on at one time. Most new traders are still getting their feet wet to make decisions. So how many trades I have on at the same time as somebody who just started, it's going to be completely different. It's literally asking the question, how fast should I drive? Kevin, it really comes down to is how fast can you make decisions? How much can you process? The better you have structure for what you're looking at, the easier it's going to be for you to have more trades on because you can handle more. And that's just fact. That's not really hurting anybody's feelings. It's just fact. Think about driving. You just start and you're watching the end of the hood. You're trading for you're driving for a long time. You're not even paying attention. And you know what? I want to get it, Kevin. I'm going to get back to that, but that's my answer for now because I want to give everybody some picks for today. So let's actually head here. And I want to walk through, I want to talk through these 2 sectors that we just mentioned, which are, first, we're going to start out with technology. All right. So technology, we've obviously been talking about solar stocks for the better part of the last week and a half. You can see now this is actually kind of cool, right? This is where we get into the question about pick a side, pick a spot. And we talked about timing and being a break-even trader. This stock is now up probably 170 to 240 in basically 3 trading days. That's a really big move. So if you look at to buy this stock today, what are the odds of it following through over the next 3 to 5 days to justify taking the risk? So this sector right now is on fire. It's in our tracking journal. It's been a trade for the last 3 days, but right now a new trade here doesn't make sense from a swing trading perspective. We could day trade this on that little bit of a shorter time frame, but we're looking for this to pause before we put the next swing trade on. That's a really good example. So ENPH and a lot of the other solar stocks in the tech area are strong. So that's the tracking journal for either a day trade today, setting up a new swing trade. However, some of the other tech stocks that we're going to keep an eye on right now are a little bit more in play right now where they're just starting new moves. So you can see Qualcomm finally breaking this move to the downside. It has some room to the upside. over here. We actually had STX showing some good price action yesterday as well. AMD pulling back after making new all-time highs. Xilinx also pulling back and taking off into new all-time highs. So you can see that the rotation text, and you know what, let's actually throw NVIDIA in there as well. So you can see the rotation where solar stocks were strong, and now we're moving on over into what you might call semiconductor stocks or some other kind of ideas like that. Also, Triple D. Triple D has been one that on this day over here when earnings, where the heck was it? That one day of earnings, I think it was over here when earnings came out, up 40%. And the stock really hasn't done anything since then. But now we start to read the tape, look at capital commitments. We're starting to see that some money came in yesterday. And now it's on our radar. You can see that this has been a big level just above here. So again, it's a trade to consider, but because of where it keeps getting shoved down by the sellers, it's a initial piece of a trade looking for a longer term position. So those are some tech ideas that we're looking at heading into today. Now we're going to move our way over into some healthcare ideas. Again, we want to stay in sync with the order flow. We don't want to fight it. We want to look where money's rotating in and out. And before we get into the healthcare stocks, I just want to really give you a challenge heading into the day. And I think this is kind of what separates somebody who kind of elevates themselves to the next level and somebody who is kind of stuck where you kind of know everything. I know charts, I know moving averages, I know all that kind of stuff, but you're not seeing your account grow with reliability. You're not seeing your account grow predictably, and you're not feeling like you're in control of the process, right? It comes down to really understanding that when we look at charts, and I want you to visualize this. Hopefully you're not driving right now. I want you to visualize this, all right? When we're looking at a chart, it's good to see all this stuff, right? Here's what I want you to start thinking about when you're looking at this. If smart money, deep pockets, somebody with a lot of research can move a stock up or down, how much money did they commit? Let that sink in for a second. Was it 1 day? Was it 2 days? Was it 2 weeks? Was it 2 months? That's going to affect how you decide to trade that stock. If a stock rallied for 1 day, that means somebody at a research firm, let's take UA as an example today after earnings. Today's the first day the stock's rallying. They did research. They like the numbers. Whoever's buying it up is holding it. We're now looking for follow-up on that order flow. Do they come back again the next day and follow up on that initial purchase with real capital? That's how you start to get conviction, because we are not predicting anything. We are literally sitting back, looking at the screen and saying, smart money did something there today. I want to see if they come back. And this is actually an amazing chart for the point that I'm about to make, okay? Right here. Earnings right here. That stock was up 40% in the 1 day that earnings came out. We were trading it like banshees that day from a day trading perspective. The next day and the next few weeks, you could actually even say the next couple of months, right? From mid-August to even yesterday, smart money did not step up after earnings. Remember, we just talked about in Mara, and they did not come back. We did not get through that level, did not hold the bid the next day. Holding the bid means buying orders are sitting there, and if selling comes in, they're absorbing that buying, paying higher prices, holding higher lows. Don't look at charts anymore as just candlesticks. Visualize there's actual money creating that, and now you start to see the order flow. So does the smart money step back up the next day? That's what we're looking for. The more obvious the smart money is committing real money, now we find some place to piggyback. Then we learn to time and timing into that trade. You will never see charts the same way again when you understand what order flow actually is. Order flow is real commitments of dollars by people with deep money, deep pockets, and a big research team. When they step up 1 day, nice, we can trade it. It's fun. We get in there. Do they do it again? That's what we're looking for. When you understand stacking the order flow the way that we teach it in the boot camp, everything changes. And you want to know where the biggest place changes? When you do nothing. Trust me when I tell you, when you could look at price action, put all those pieces together and you say, you know what? I don't see a reason to take risk. There's nothing going on. If the smart money's not involved in a stock, why in the world would I be? Think about that. And I'll give you another good example. We'll talk about this. Okay. Maybe we're starting to see some buying in Zoom, maybe, but can you look at this stock right now and say, my gosh, smart money, it's so obvious they're building a position here. I can't wait to, no, maybe it bounced a little bit. Maybe it's reversing, but you take a look at this stock where you're probably beating your head against the ground, waiting for it to reverse, versus you could have joined us in the community and took advantage of this stock that went vertical for 4 weeks without pausing or pulling back. That's the difference between spotting real trades happening where you're visualizing some hedge fund. Let's use John A as an example. John A is here. John's here every day. Love you having you here every day. You are not just visualizing the candles. You're not visualizing the color of the candles. You are now looking at this John A as a hedge fund, and he's like, and he calls up, let's say he calls up Lewis. John A calls up Lewis on his trade desk, and he says, Lewis, we're going to start buying 5 million shares of net. Get in there with your first $150,000, $250,000 on Monday, and we'll see how the market reacts. That hedge fund is now what you're thinking about. You're thinking about, okay, somebody started building a position in Triple D yesterday, and if we put that back up on the chart, that's pretty exciting. It's absolutely something we can keep an eye on. Let's see if they come back. Let's see if they were dumping a short position by covering and getting out of it, and that was short covering, or is this new buying and we're starting to build into that position? That's the difference between trying to be the best chart reader on the planet and actually digging in there and saying, real money was committed. Let me see if they come back. I want to spot and track the order flow, and then I'm going to find a spot to piggyback. That's what separates somebody who's breaking even and knows everything about charts from somebody who's digging in and understanding it's obvious that I'm going to hop on board. That's what separates what we do from what I think most people do, because we're not looking for chart patterns. We're looking for money. And that's what separates what we do from your common, tell me where a flag was. Tell me, is that a wedge? Is that a doji? That doesn't matter for making money. It's position sizing and how long you hold it and finding great ideas. That's trading. And if you don't know my background, I had 2 trading firms in New York City. I've done this a long time. All right. That's the difference. Now let's get into some ideas in healthcare. We actually talked about some healthcare stocks. All right. So healthcare, we are talking about obviously UNH, which exploded after earnings. So this is on our radar right now. UNH pulled back yesterday, which is kind of awesome. We'd like to see it pull back, give us a little bit of a better price action. AUPH is another one that's been on our radar over the last week, opening up a little bit flat this morning. Merck has been on our radar this week. Merck paused yesterday, looking for a new entry in Merck. TDOC. Really good, clean break up to resistance. Now, again, remember what we said. First day, all right? First day, that's awesome. Right here, right? First day, that's awesome. Did they follow it up? Yes, one more day, and then they left the building. First day, that's awesome. All right, they held the bid, didn't sell off. Next day, they held the bid. So after earnings, the stock's exploding, sitting at resistance. This is the exact price that this stock sold off last time. So this needs to get above 154 before it's a trade that I'm looking for. So TDOC. Lilly is another one that's been on my radar. Let me zoom this out a little bit. And I'm actually pretty glad that Lilly pulled back a little bit. It's going to give us a little bit of a different opportunity to get long in a new stock, in Lilly this week. So healthcare has kind of been rising up the list over the last week or so. Now we need to work to time entries into some of these healthcare stocks. So you see what we're doing here. We're not predicting anything. We're simply going over here and looking at the sheet and saying what's working its way up the sheet, what's working its way over yesterday, the last month, and the last week. Then we do a little bit of a deeper dive into finding some of those ideas. Okay? All right. Covered a lot of stuff today, right? I promised I wanted to finish up with some of the topics that we talked about on last night's coaching calls. Super important that you understand and kind of think deeper if you want to be better tomorrow. If you are where you are today, the first thing I want to say, congratulations. It's 7:30 in the morning, 8 o'clock in the morning. We're having some great trading discussions, right? However, there's a higher level of trading for all of us. I have a higher level. You have a higher level. JJ here has a higher level, right? Everybody. Lewis has a higher level. Here's some questions that we discussed last night on the coaching call, and I want to walk you through them just a little bit, okay? I just want to give you a little bit of a insight into some of the stuff that we talk about on our coaching calls. And again, only you could make a decision if you want to join the 30-day boot camp with us. It's not a subscription. It's $295 for 30 days. I just want to show you what's in there because I want to inspire you to think deeper. I want to inspire you to be a little bit more passionate about your own success, right? Click the link below the video if you want to learn. Just learn what's in it, all right? But here's the last night's questions, and I want to walk you through these questions, okay? All of this is what we talked about on last night's coaching call. First, we talked about setting up software. You know, it's so interesting. There's such a big part of trading that you can know how to do everything, but if you don't have your software set up to spit out the order flow and give you the good ideas, you're always going to feel like you're kind of chasing. So we spent a lot of time on setting up order flow last night. We also spent probably a good 20 minutes on a much deeper discussion about stacking the order flow, which is setting up all of those ideas that we're talking about right now. Got another question last night that should you wait 60 minutes before initially putting on a day trade? I will tell you absolutely not. I know some people like to wait, but if you're an active trader who has conviction, did your game planning, and that market is opening, the first 90 minutes of the day, are they volatile? Hell yeah. Is there better money to be made because of that follow through? Yes. And this is what I walk everybody through. And this is a monster part of trading. Go into the day, game plan 5 stocks. Say, this is exactly what I expect to have happen in the first 90 minutes of the day. You only need one. You only need one out of the 5 to do exactly what you, because you're like, oh, Pete, the 4 of the stocks didn't do what I thought. Who cares? One did exactly what you thought. You should be making money. So again, this is a personal preference, but that first 90 minutes of the day, last 2 hours of the day, those are the money spots for day traders. So we talked about that in a lot of detail last night. Once you go through what we do, there's no reason not to trade in the first 90 minutes a day because we're preparing you for the whole thing. All right. Account size and risk. This is, remember we talked about before, by far one of the biggest mistakes that traders make is trading too big relative to their experience level. We had a monster conversation last night about risk per trade, how to allocate certain dollar amounts based on the total account size that you have, whether or not you should use leverage, who should use leverage, and when you should use leverage. A great question for this week as well. And Stephen Williams asked this question: should I not trade because of FOMC this week? And the answer, no. If you love the ideas, put that trade on. I mean, we actually have a trade that we initiated and we're hanging on. Plug right now. We talked about it last week. Everybody knows it was one of our cover stories last week. So plug, yeah, we got FOMC this week, but this trade's setting up perfectly. Don't let FOMC stop you from trading. Now, you might adjust your share size a little bit because of FOMC. If it's a new trade, you're buying on Wednesday, but it shouldn't stop you. We talked about using new services and what types of new services, adding shares after a gap. This was a big part of yesterday's question as well. It's funny. We talk about having an initial trade, and then we give everybody a spot and a price, literally the exact price of when to add to a winning position and how many shares to add to a winning position. This question that we got last night was great because the question came in is like, what if it gaps beyond that level? How do I use it? How do I get in when it gaps past there? And we kind of walked everybody through the difference between that price and how to use a stop limit order. So your stop price might be $39, but your limit price might be $39.50. So even though that's well above that, you'll get price improved all the way down as long as shares are available, but you can't get worse than that. It's kind of an advanced ninja thing, but pretty cool. We also talked about how to trade a bigger list of stocks, and that really comes down to setting up your watch list properly. You could trade a list of 100 stocks if you understand how to do it. 2 proprietary trades that we have: bullish U-turn versus snapback. We answered this for everybody today. Greg's on the call right now. How to keep trading simple. These are actually pretty interesting here. How to keep trading simple and getting beyond break even. I talk about it all the time. Most of the active traders that I know that are 7-figure traders that have been trading for a long time, they don't make trading more complicated than this. Maybe you put on a couple of moving averages. You need to be able to make confident decisions. Remember what we talked about before. Can you look at that and say somebody with a lot of money started to allocate it to this trade? So remember, we talked, John A. called Lewis, and Lewis, start buying 500,000 shares for the hedge fund. Then do they come back the next day? This is going to be fun for us to watch today. Do the buyers come back in triple D today? And what does that mean? That's going to be fun for us to talk about tomorrow and the rest of the week. All right. So getting along, adjusting share size when you have fear of missing out. So that's another thing. Remember how we talked about buying, watching a stock explode? Maybe you're too late and you have the fear of missing out. How do you adjust your share size to get involved in a position that might have gone a little bit too far without feeling like you're chasing it? And this is a really, really big thing. Because if you think about building a sector watch list, and if we start every day talking about this sector rotation, how important is it if we know tracking order flow is the easier way to trade? If we know that sector rotation is where that money, that order flow is flowing into, doesn't it make sense that one of your first priorities as a trader is to understand how to build the right list of stocks in those sectors and then how to track those sectors? There's no guessing. This is where predictable, profitable trading comes from, because you're literally just piggybacking and tracking the smart money, as opposed to running a scanner every day and just saying, oh, that stock was up 20% last night, I think I'm going to trade that. That's not trading. That's amateur. You want to level up your game? Think about all the questions that we just had. I'm actually going to put it on the screen one more time if you want to take a snapshot of it. Let me just pull that up for you. Take a snapshot of that, because that's all the stuff that we talked about today. All right. That's a big deal. That call last night was an hour and 45 minutes. That was just our Monday night coaching call, an hour and 45 minutes. And then now everybody today is going to watch the replay, take notes, and then we come back and have more conversations about that. So we covered a lot of stuff today. We went a little bit overtime. I'm getting poked from the side right now because we got to get ready for the other call. Look, I just want to say thank you so much for joining me today. I really hope that I'm providing deeper insights into making the difference between what it means to be a chart reader and a trader. We want to elevate you to the point where you're actually trading and you have massive conviction in what you're doing. If you want to join us, look, it's only 30 days. It's less than you probably risk on one trade. It's only $295. I'm not selling you on it. We have the most amazing community. If you want to invest that money in yourself and spend 30 days with us, you just saw a little tiny piece. This is what I do all day. So if you want to join us, I'd love to have you. If you find this stuff valuable, please do me a favor, smash that like button, subscribe, share the video with some friends. I'd really appreciate that too. I'll see you tomorrow morning. Be awesome today. Thanks so much for joining me. I really appreciate it.